Hey guys, today's Sunday, February the 26th of 2023. And I needed to do a revisit of the dollar because there's a lot of stuff going on in this FX gold and maybe other currencies. So without any further delay, let's get into it. So we're going to start off with our weekly cycles and we want to figure out what's going on here with the dollar. So there are three important cycles here. The strongest one right now is the 181. And this one has a strong Bartel. And it peaked around November the 28th, and this cycle is down. So this cycle is the bearish cycle, meaning that, it could be an ABC correction that's going to play out for a while and could push, the dollar down, meaning that gold could continue going up and whatever inverse to the dollar. Now, this is the bearish cycle, which is the strongest. Now, the next one will be the 227, and now this cycle is bullish. So in my mind, I'm thinking if this is a wave 3 right here, and that's a wave 4 using Elliott wave, this could line up to do the wave 5. Right there. So going back to the 181, if this is a wave 5, then an ABC correction is expected. And this cycle confirms an ABC correction down. So let's backtrack. This is a wave 5, an Elliott wave. And this cycle is going to play out, then an ABC down into May of 2023. If it's bullish, looking at the 227, my program says this is a wave 5. I'm leaning that this is a wave 3. This is a wave 4, meaning that there could be more upside for the dollar even to retest that high of 113 and change or higher. If you even retest the all-time high, and maybe, geopolitical stuff happening, things getting a little more crazier, people more piling into the dollar, bring pressure more into gold, or maybe both of them go up. I don't know. But that's what I'm kind of seeing. So I just kind of let you know, that this cycle is up and this could be a wave 4 and it could push higher. So that was the 227. The 396, it's even more bullish because this one peaks out somewhere around April of 2023. So also could play out is that this is a wave 5, A, B, C correction down. If it's a wave 3, a wave 4, wave 5 all the way into April of this year. So those are my thoughts on those two cycles. I could do the dominant cycle, which is right here, 82. And this one now it's starting to turn and it's starting to go up. So it's kind of like lining up here with the weekly cycle. Let's go to the daily cycle and see what we could extract out of that. Okay, so this is the daily cycle, and there's only one that's strong, which is the 289, and this one is bullish. So we are just hitting a trough this weekend. Now this cycle is going to start going up. It missed a peak here. It came a little later. And then it came down, and you know how it is with cycles. It's not exact. Once in a while you get them exact, but most of the time it's more like of a bell curve. That once it starts getting here, you can see that we made a low here on February the 1st, and this one is bottoming out on the daily cycle pretty much this weekend. And now this cycle is going to be going up. Same thing, what I taught you in my conclusions, either a wave 5 or a wave 4. Wave 5, A, B, C down. Wave 3, wave 4, we're going even higher, and we're probably going to kiss the high and even push higher. So those are the thoughts, but know that the daily cycle now is going up. The dominant cycle, it looks like it's bottoming out here. This is a little more super fractal. This is 24, almost, close to a month. So I'm not going to give this too much weight. I'm leaning more on the daily cycle. This one is about to turn and start going up. Okay, guys, so this is the seasonality chart on the dollar, the percentage of months in which U.S. dollar closed higher than it opened from 2019 and 2023. And we can see here that May is one of the weakest in regards to 5-year average. And if we go to a 10, you see that April is the weakest. So we have a peak on February. Let's see, 5-year. Yeah, February and March are kind of strong within a 5-year, and then May is the weakest. Over the 10-year, February's the strongest. March a little, and then April is the weakest. And then the 15-year, February strong, April the weakest, and 20-year, February is the strongest, and then April is the weakest. So, with that being said, looking at the cycles, the 181 on the weekly, it's a trough on May. So that kind of lines up with the 5-year average on the weekly, because it hits a trough on May the 9th of 2023. So that cycle is the first one I showed you. That cycle is down. This could play out using the 5-year. If we go into the 10-year and on, though April is the weakest, meaning that, the 227, it's a peak around March the 14th, which is here. And the 395 hits a peak around April. So they're inverse. So pretty much from 10 all the way to 20 years, April is the weakest, but the cycles are saying we're hitting peaks in March and April, the 227 and the 395. So it's going to be interesting how this is going to play out. And knowing that the 181 is a dominant cycle and doing Elliott wave, we're either on a 4 or working on an A going into a B. So these are the kind of things you kind of have to look at and kind of wrap your head around it and see what makes sense. So far, the 181 is lining up with the 5-year. So if it's an ABC correction, this could possibly play out because the 181 cycle is already down. Now, what throws a monkey wrench in this analysis is that the 227 hits a peak on March the 14th. And that makes sense because it's February is strong, but March is a little stronger on all the 10 and the 20. Yeah, it's a little stronger. And then the 395 cycle hits a peak around April 2nd of 2023. And then that one is all bearish except 5-year average. It's kind of flat. It's kind of inverse. So cycle peaks on April, but seasonality-wise, the dollar is weak. But that's just kind of a glance looking at this and just kind of getting an idea. We're going to go into the seasonality chart of dates and just kind of get a clue there to see what could be playing out there. So here's our seasonality charts with dates, and this is what the dollar has actually done as of February the 1st week. It's been moving. And it's already taken out the high of the year. Even though it has a nice little correction from September the 28th around there, it's now starting to grind higher. So using the 5-year, we know, looking at the other seasonality, that May was kind of bearish. But it's showing, using the 5 years, that it's chucking along and that it could pull back around March the 22nd, kind of go sideways and continue grinding higher. If we put the 10-year average, you can see that somewhere around March the 13th, it kind of stalls, March 22nd, and then it kind of goes sideways. Then using the 15-year average, you see that it kind of stalls around March the 7th. Going back and forth, March 15, kind of goes sideways to pull back into April. Remember, April from 20 years to 15 to 10 was the weakest, and it pulls back, and that makes sense. The 10-year is kind of sideways, but yeah, it does pull back. So April makes sense. And then on the 5-year, we knew that the seasonality in the other chart I showed you, that May was the weakest, even though it looks like it makes a swing high around May 11th. Also March the 21st, change of season. And it kind of looks like it kind of goes sideways, and then April 12th does another leg higher. You put all three, this is kind of like the price action you get. But what's important is that the seasonality chart helped us into getting into the dollar long and maybe shorting, the metals, and do an inverse trade or a swing trade, short gold and long dollar here. Now the question is the dollar going to continue and then do this playback, this play of pulling into April, May, knowing that April is more of the weakest month, and then using a 5-year May? That remains to be seen. And then think about it. The cycles are now pointing up, and some are up on the weekly, and the daily's up. And Elliott wave, is this a 4? Is it an A, B, C down? Or is it going to continue, test high, and push higher? So those are little things you got to kind of wrap your head around it and kind of think and see what's the best path to least resistance in regards to your strategy. If you're swing trading, you're playing cycles, you're just in and out, you're playing the long term, or whatever your strategy is in regards to investing. Those are the little things, the nuances you have to kind of have in the back of your head, because there's a lot. It's very complicated, and there's a lot of moving parts. It's always moving parts happening. So if you're super long term, you got to make sure that this is not an ABC correction and that this is a wave 4, because that means that you're going to continue pushing higher. Okay, so this is our Elliott wave chart. We're trying to figure out what's going on here. So you can see that on the monthly, this is a wave 5. So could it be an A, B, C correction? Yeah, it's possible. It's a wave 5. That's what the program is indicating. When we go to the weekly, and mind you, look, we're within the mobile band, so this is going to be noise unless we clear out 108. If we could clear out 108, then chances are it's going to retest the high. But this is going to be all noise, so we'll just keep an eye on that. And then we put our indicators. You can see that you're below the linear regression channel. And I'll show you some of the targets that I have, on my eyes on. Looking at the weekly, wave 5, same thing. 1, 2, 3 has been established. Working on a wave 4. So wave 4 could be anywhere between that 105.43 and all the way to 106. Those are projection targets. What's interesting is that we either are very close to kissing the 50 and the 20 SMA on the weekly. And we broke out of the mobile band, so that's bullish. So prices are pushing higher. But now this week is going to be interesting. Can we close above the 50 and the 20 SMA on the weekly? There's a wave projection 4 that I showed you there, 105.43, and also 106.92. And the Stokes are positive. So if we could push above there and close above 106.88, that could still continue pushing higher, which is going to bring pressure on the metals. Just want to put that out there. We put some targets here. This is the ellipse technique. So we have a target here that once it hits there, that could be, it could kind of stall. I also got some targets there, what I'm going to show you on the daily. But, if we take that out, let me see, did I show this earlier? Using the Fibonacci from this swing low to swing high, we found support. We pierced the 50, which is center of gravity, and now at the 382, a little above it. And if it pushes higher, that 108, the top of the mobile bands, could be your next target. Let's go back to the weekly. Just trying to make sure I cover everything. And these little stars are showing up. It's showing that, if it's going to continue going higher, we got to close above these stars, these little, like little X's. And we close above here, and we're dancing around the green ones. If we could close above the red ones, that means that this is going to continue going higher. If it stalls somewhere around here, there's going to be another leg down, which makes sense. This is the wave 4 right here working on it. And we need a wave 5 down, meaning that it could be an opportunity to buy metals once the dollar starts going down to finish this 5-wave correction. Now let's go to the daily. This is where it gets juicy. So in the daily, we have this, so we can see everything here. Wave 5, 1, 2, 3. Looks like we already have a wave 4, but we kind of, and an A, B, C, and we're still trying to chuck along higher. The 200 SMA is up here, 106. So you see, there's a lot of stuff right here. The program says this is a wave 4, but if it's going to push higher, it could be a bull trap, and then push down to do a wave 5. Projection targets 96, 53, and 91. I have a target of 98 using the square of 9 of Gann. But, you know, these are possible too if the Elliott waves are going to pan out. Nothing looks really negative on the Stokes. They're still kind of sideways pushing higher. So we could, you know, it's kind of those, this is where I, you know, if you ask me, is like, if you're long, this is where I start, you know, tightening my stop. Don't get too greedy, because I'm going to show you some other things where, you know, it's getting right now where it's like, it's either going to be a correction next week, pushing down, kind of to pause this move and maybe regain and maybe push higher. But I will be tightening my stops, and I'll be looking, you know, for gold for maybe a possible, you know, swing trade to the upside if this pulls back down. But this is what the daily is saying, meaning that if there's a wave 4, there's going to be a push now to complete a wave 5, meaning metals could rally again and maybe, you know, push higher, and we'll probably maybe take out 100, which I've been having a target of 98 somewhere around here, which I've been eyeing, but it could even go to 96. Let's see. In regards to the ellipse technique, this is what I wanted to show you. We already kissed it, so we're here. So I wouldn't recommend, you know, buying dollar right now unless it really breaks, you know. I mean, there's a target here of a 106 or 106.83. There's a date of 3/3, March the 3rd. Also March the 22nd to keep an eye on. And the ellipse techniques tells you to keep an eye on March the 2nd. And if it, you know, if it's on a weekend, just look for either on a Friday or at a Sunday. But this could be a day of increased volatility, that it could be where if it goes sideways from here and comes the 2nd, either on a trading day, it could flush down. Especially if it goes sideways, it could definitely just flush down because it's not really going up. So keep an eye on that, on those dates. But so far, it's above the 20, the 50, above the MOVO, but it's entering an area where it could start stalling and maybe correct. And if this is the wave 4, it's going to push even lower. Okay, looking at our commitments to trader report, we can see where large speculators are building a long position here on January the 16th. They started accumulating. You can see that the dollar kind of went down. This is a weekly, so we know it was like February the 1st, made a low, and then now it's climbing up. And a commercial inverse, so you pretty much want to follow what commercial is doing. So now they're unwinding or unloading while the dollar goes up. So we need to take out, commercial needs to take out that minus 20,204 to really confirm this move even more to the upside. As of right now, they're, you know, unloading here. And in regards to commercial, we need to take out 17,953. So large speculators are buying, commercial are selling, and those are the key level. If we could have a close or weekly close below 1984.3, that's going to be a given that the dollar is going to continue going higher. All right, so this is my market geometry chart. I'm looking at the dollar, and you can see that it, you know, pierced this angle, and I'm using it on the weekly chart. And right now we're at the 50% right here. It'll be interesting to see if we could chug along. It would be the 75, and then obviously it's going to hit this top of the angle of Andrew's pitchfork. But so far, it was a nice little, you know, fake to the downside, squeeze some bears, and now above the 20, and now smack in the middle within this key impulse wave right here. So I want to see how we're going to close this weekend. Not this weekend, this week. If we could continue chucking along and do a little, what you call it, a bear trap, a bull trap, and then maybe push lower to do a wave 5. If that's going to play out, because we already know this is a wave 3. But if this is a wave 5, then it's going to be an ABC correction down. Let's continue going, looking at the chart. Action reaction lines, it found support right here at this action reaction line for this impulse wave up. I got to create one down here to see how, where there's going to be resistance. Using the Gartley and ABC, there was a timing point here, and I was expecting a turning point, but look at that. Volatility increased right here the next week. So this was a key somewhere around February the 23rd of that week. It just chucked along. There's a couple of targets I have my eyes on there. Using the cycle and the mirror cycle, you can see that right here. What is this? February 27th. So this week and the first week of March, things on the mirror cycle starts going down. On the Dewey cycle, we hit a peak around March 1st, and then this cycle goes down. So we're very close where it could be a possible turning point. So just be cautious. Even though the Gann swing is positive here on the Gann swing chart, and the advanced Gann swing is positive. Just look for a reversal of a daily candle taking out at least 3 candles down, or the next next 2 down below it, next to it, for a possible reversal. The Gann angle fan didn't get to kiss the 1 by 1, so it's still positive, still strong. And I think that's it for the geometry chart. I think this is probably going to be my last chart. I'm not going to go into the master chart. It's not really, this. I pretty much covered a lot of stuff that I covered here within the master chart. There might be some other things, but I don't want to make this video too long. But I did want to cover something. Someone on YouTube asked me, why don't you use Gann ratios? And I replied, yes, I do. I use Gann ratios. This is a retracement chart that I have on Thinkorswim, and I plotted all these numbers. These are what Gann recommended, and it's broken down by thickness of what's important. So the most important one is the 50%, which is the center of gravity. Then the 66.7, which are the yellow, and then the 25, the 75, and then these are other levels that you'll watch. They're like important, but not as important. And then you got these little thinner ones. And you can look at all the ratios. You want to copy them, put them on your Thinkorswim or whatever, it's fine. But this is my Gann ratio. I use everything. I look at everything because I want to look at all the other traders are looking. And maybe a lot of people don't look at Gann, but at least I got the Gann crew. I got the Fibbo crew. I'm looking at everything, and I'm making my own choices, my own decision on what's best in regards to risk trading. That's why you see, it's like, man, you guys, you look at a lot of stuff, and it's like, yeah, you have to, I mean, a computer's looking at more stuff than you and has better memory than your mind, so you have to kind of look at everything and make a, good, wise choice in regards to what your plan is going to be. But if you just look at a simple moving average, you don't look at anything else, it's going to be tough. It's going to be very tough. So I just wanted to put that out there for the person that inquired about that in regards to the ratio. So look what's going on with this ratio. There's a target of 108. If it's going to get there, that's the 75% from the all-time high to this low of $70. So I take the whole range. I'm not doing fractal. I'm taking the big picture levels. And this is where, you can see where it stalls here, where it finds support here. It didn't find support here. Broke through the center of gravity, found resistance here, and if we're gonna chuck along, there's that 75 there that you want to keep an eye on. And if it pulls back 104.24, and if it even pushes lower, 102 would be that next level. Now, in regards to the Fibbo guys, this is a thing I learned from Magenta, I can't remember the name there. Using his technique of the first impulse waves on the weekly, and then these fib grip lines. We already kissed it at the 105.31. So this is a key level. This is the 1.618. So this could be there could be resistance right here. You can see how we stalled here. We pierced it, did a bull trap, and then shut down. Collapsed and kind of head faked some bears and then reversed it. So now we're here. So now this is the pivotal point. If we get to close above here, even if we pierced it above, come back down, retest it, and shoot up, your next level using the fib grid will be that 107.6. Now, this is where it stalls, and this is a wave 4 or somewhere around here, and then it pushes back. And doing the Elliott wave, this is a 3. Chances are 99 or have a 98 somewhere around here. That's the target I was thinking where a wave 5 would end, and then go in, and trade, inverse or short gold and or currencies or whatever. So this is the ultimate target. It hasn't played out yet, but this is where I'm thinking where it will finalize. And we already know April is very weak. And then using a 5-year average, we know that May, is weak, but not compared to April. April is like the weakest. So if this is going to pull back, you will be buying gold as it goes down. And then once you get somewhere around here, you reverse positions or, lock out, sell out of your gold, and then pile into the dollar or, into the currencies. And then just short, golds and the metals and currencies. And let's see if this dollar is going to, rally up to even test this 114. So let's look at the simple glance. You can see it right here. We found support at the 20 SMA. That's why I like to put the moving averages. And we're chucking along right here. The Hikanashi candle is positive. It's in that noise area. It's in the mobile band, but it's looking good. Look at the hockey stick right here, which I like to see. And the sentiment is up. You're above the linear regression channel on the point. On the weekly, you got a PPS buy signal. And you got the MACD that's positive. Although sentiment is just chucking down. It's somewhere around 70. But this is the area right here. You got the 50 SMA, the 20, and we're chucking right here. This is going to be challenging. And we're already on the fib grid. We already hit the target. So this is where the dollar's going to have to show if it has the nuts to it close above and push higher. Because you got two moving averages right there. The cloud looks like it's starting to get positive here, or not positive, kind of like negative. But price action kind of caught up because this was positive. So it looks like it was about to turn negative, but we'll see how that's going to, but this is going to be a key level, 105, and it's showing it right here with the fib grid. And then on the daily, look at the linear regression channel. This is where you don't want to go long. If you're thinking about going long the dollar, wait till it pulls back and wait till it gets somewhere around here. And if it doesn't, Elliott wave style, wait till it takes out this one. That's going to confirm a wave 5 down, and then wait for like $98 around there for, maybe a possible entry. The market sentiment looks like it's bottomed out here. Looks like it wants to go up. So, it's in the cloud. It's one of those things. It's like, okay, how much can we go higher? Should I go in long here? You're in the, in the cloud on the daily chart. So it's going to get choppy and volatile. You're dealing with moving averages right here. Fibo, you hit a target. You got a value area high of 105.68. So if it's going to push higher, it's going to be very limited. Linear regression channel in the cloud. You got a pivot high here of 105. There's a lot of sellers waiting for you. And then there's also some stops that it could kind of trigger, a little capitulation. But, you have to be wise and just kind of manage your money. Just be wise because it's not going to continue going up. It's going to turn. It's like an escalator. It goes up, it goes down, it goes up and goes down. So you have to you just got to play the game right. Unless you're gonna you're gonna get all chopped up. Let's go to that was fib. That was Gann ratio. Midpoint chart. Midpoint chart very important. We closed above 104.70. I was my last video. If we close above there, there's a pivot high here of like 105.72. It already closed above here. So this is bullish. On the daily, you're bullish. You're very overextended, mind you. You went past 105.01 on the daily. So it's very bullish and very overextended. So it's just kind of chopping. You can see Friday's action was very choppy. This is overnight. And looking at the weekly, you're kind of like at that range. If it's going to even go higher, 105.70 and 106.09 for possible extensions, for like the week. But on the daily, you're very overextended. And on the monthly, you got the previous high, which was somewhere around 105.32. So it's very toppy. You got to be very cautious. I wouldn't be surprised if we get this nice little pullback next week to kind of regain strength and then maybe continue pushing higher. As long as we don't take out 104.69, that's good. But everything daily, weekly, monthly, and yearly is grayish, but it's because it's above. We haven't had a monthly close yet. So once we go to March and we stay above here, it's going to look very green. That's it for me. And I know this video is probably long, but it's full of information. You could dissect it and see what's best for your trading plan. But I'm going to sign out. The kids are rolling downstairs, going nuts. I don't even know what they're doing. They're probably just throwing things all over the place in the kitchen. I'm going to sign out. Hopefully you have a great Sunday. Enjoy your family, your friends, whatever you're going to do today. And I'll keep you posted on my thoughts on the dollar.